Okay, all right, got that. Thanks for all the chatter and the buzz, Nimesh. Let's quickly move on now. We've actually got Nigel now to take us through all that has worked for Tata Steel. He also had a conversation with the management today.
Yeah.
And the numbers and the overall performance is good. Nigel, what else did you pick up?
Well, that's it. So we made it back from the F&O desk back for the Tata Steel, update. So Tata Steel, actually, the numbers were good. The consolidated EBITDA number was good. The margins more or less in line. The India business did quite well. The EBITDA per ton was better than what the street was working with. And in terms of the European business, it was more or less in line. The debt as well went up marginally, but net, those numbers look good. But your question will be, but then why is the stock not running away? Let me highlight a few points post my interaction with Mr. Narendra here on CNBC-TV18. First, on steel prices. He said that they're not moving up because of lower avenues to export, because the export markets are flooded, and also the domestic production for all companies is ramping up. So that's why, in fact, steel prices are not moving up. Next, he said, in Q3, coking coal costs actually will dip by close to around $5 to $7 per ton for Netherlands. So good for them. But for the India operations, actually the coking coal cost will go up by around $5 to around $7 per ton or thereabouts. So that's why, in fact, the cost will go higher for Indian operations. Then he said on steel prices, actually they'll dip by close to around 30 euros per ton in Netherlands. And in India, it will be down by close to around 1,500 rupees per ton in Q3. So for India, actually, the margins will see some kind of compression because of the lower steel prices and the higher coking coal cost. Even in Netherlands, we'll see some kind of a pullback. In UK, though, the margins will be more or less stable out there. With regard to, when I asked him about UK moving into the green, he said it'll continue to remove losses, even for the next couple of quarters, because things are still under pressure out there. He says that maybe in the first half of next fiscal, probably it could move into the black, but it will require some government support, like what we have seen in other parts of Europe. They're hoping that in UK as well, there's some support that comes in there. Cut down of the quotas and put in some import duty. That's what could help to turn around the UK business. But let's focus on Q2 earnings then. They have been impacted by several stocks.